Seminar presented by Dhalla Wealth Management at National Bank Financial featuring Fax Capital. My name is Sienna Foyanesi and I'm an associate with Dhalla Wealth Management. At Dhalla Wealth Management, we strive to inspire, create, and develop positive change by optimizing your wealth and investment and portfolio management strategies that are tax efficient and built with you in mind. Our agenda today will respect your time as we aim to keep this presentation short and to the point to maximize its value. I would like to introduce Ramel Dhalla of Dhalla Wealth Management at National Bank Financial. Ramel is a portfolio manager with 15 years of experience who combines his investment expertise with the team's in-depth financial and estate planning. Ramel will now introduce the principals of Fax Capital, who will then discuss their business model, opportunity, market outlook, and answer a few questions. I'd like to hand it over to Ramel to tell you about Fax Capital.
Thanks, Sienna, and once again, thanks for listening in on our virtual seminar. I'd like to begin by telling you how I found out about Fax Capital and then introduce the principals of the company who are with us today. Prior to the IPO, the principals came to our offices here in Winnipeg to discuss the opportunity their company presented for potential investors. I was pleasantly surprised to hear how the company would be structured in such a way that the principals and their investors would be fully aligned, meaning the principals only gain wealth through the appreciation of the stock price. There are no ongoing management fees, as you'd see in a mutual fund, and there aren't any performance bonuses like you would see in a hedge fund. I like that because I believe that's the most ethical and fair way to operate a business like theirs. The other main aspect that caught my attention was that the principals are highly experienced and remarkably talented individuals. The Driscoll family is the foundation of Fax Capital. They have a long track record of success in building businesses and generating hundreds of millions of dollars of wealth for their investors. You are likely familiar with some of their companies, like Century Investments, which was one of Canada's largest mutual fund companies before being bought out by a competitor for over $780 million. The family also built one of Canada's largest midstream pipeline companies, Inter Pipeline, which was worth over $10 billion when the family ultimately exited the business. There are numerous other examples I could cite, given the family has raised over $35 billion in capital to form various businesses over the years. The bottom line being that this is an ultra wealthy family that has staked their own money in Fax Capital alongside their shareholders. Blair Driscoll, the CEO, is joining us today with two of Fax Capital's managing directors, Mark Robinson and Nick Lim. Together, they have decades of experience in investment banking, having worked on deals sized in the billions of dollars. Mark is an award-winning portfolio manager, having won the Lipper Award for Best Small Cap Performance in 2018, and Nick joined Fax after serving two of Canada's most prominent investment firms, Brookfield Asset Management and Fairfax Financial. They both also have tremendous research acumen and exceptional credentials that suit them perfectly for their roles at Fax Capital. I'll now ask Blair Driscoll, the CEO of Fax Capital, to begin his presentation.
Thank you, Ramel. I really appreciate that warm introduction. So again, my name is Blair Driscoll. I'm the CEO of Fax. So we'll dive right into our presentation. I got to start briefly on slide 2, the obligatory statements here. So this presentation does contain forward-looking information and the use of non-IFRS accounting measures, and you shouldn't place any undue reliance on that information. So we'll kick it off on slide 4. So who is Fax Capital? Well, Fax is a TSX-listed investment holding company. It trades under the ticker FXC. We have approximately $200 million of capital on our balance sheet today. In terms of our investment focus, we're focused on investing in small cap public and private companies, predominantly located here in Canada, although we do have the flexibility to invest outside of Canada, but our focus today is in Canada. In terms of our ownership positions, we look to own a significant minority and/or control positions in the businesses in which we invest. We're active owners, so influence and control is important to us. We're also capital structure agnostic. So to put this simply, what this means is, although we have a preference to invest in the equity in terms of the businesses that we choose, we also have the flexibility to own the debt or hybrid securities such as a convertible debenture or preferred share should we choose. So we do have ultimate flexibility, which allows us to be opportunistic. If you look at the structure of our company, I think the most important point to understand is we are a bit unique. We're a permanent capital base, so we're not a mutual fund. We're not subject to redemption risk. This allows us to take a true long-term view in order to maximize the power of compounding, which is an enormously powerful structure and vehicle. We don't charge management fees. We're internally managed. This is incredibly important to shareholders because they ultimately bear the cost of fees. And by having no fees and being internally managed, it means shareholder capital can compound much more efficiently. In terms of our approach, as I mentioned, we're very long-term oriented. We think in terms of years when we invest. So think 5, 10, 15 years. We're long-term owner operators. We're extremely disciplined in what we invest in. We take a private equity-like due diligence approach, and we're extremely patient in order to find the right long-term opportunities. We're active owners. So again, we look for significant influential positions and or control positions. We're partnered with the businesses in which we invest and ultimately are active in helping them build their businesses and take them to the next level. In terms of our portfolio, we're very concentrated. We intend to own 10 to 15 investments with our current capital base, likely on the lower end of that spectrum. So by being very concentrated, we're highly convicted in terms of our investments and our approach to investments. If you look at our team, we have a really wonderful team, proven operators, great investment team, which you'll hear from Mark and Nick today. But I think the most important part to understand, and Romel hit on this in his introduction, is we're extremely aligned with our shareholders. So the Driscoll family, my family, put in $120 million of our own dollars into Fax alongside other shareholders. We're pari passu on an economic basis. We don't charge fees. So the only way we make a return is if our shareholders earn a return. This is incredibly important, and I think a very unique aspect of our business. So turning to slide 5. As I mentioned, we invest in both public and private businesses. This slide highlights the public market opportunity that we see today. So we intend to invest approximately 60% of our capital into public small cap companies. If you look at the left-hand side of this slide, the chart there, what a lot of investors don't appreciate is Canada really is a market of small cap companies in terms of its publicly listed issuers. Approximately 91% of all our listed issuers have a market cap below 1.5 billion. That's a staggering number. And the important part to understand here is most institutions, pension funds, mutual funds, they are not able to invest in this huge breadth of our small cap market due to illiquidity. They're focused on a very small subset of larger companies, which in this chart is about 9% that have a market cap above $1.5 billion. So that's a small subset. We at Fax are focused on that 91%. Our structure allows us to invest in less liquid businesses and take advantage of compelling opportunities that we see in that market. So if you look at the right-hand side of this slide, you'll note the bubble on the bottom left. This highlights the companies and the public small cap companies that we own today at Fax, Hamilton Thorne, Information Services, Points International, and People Corp. These are wonderful small cap companies that have a tremendous potential for growth, tremendous competitive advantages. And our intention is to be long-term owners, being an institutional sponsor to own these businesses as they evolve and grow to much larger, successful businesses. And we want to own them through this evolution. And if you look at the top right-hand bubble, you'll notice that there is a sort of high-quality peer group, Boyd, Cargojet, Premium Brands. These are all examples of businesses that were once small cap companies here in Canada that managed that transition because they were very strong businesses and became much larger and successful. And we feel as though the investments we made in our small cap public companies today, have a high probability of following this path, and our shareholders are going to benefit tremendously from the compounding potential. Turning to slide 6, this is our private markets opportunity. We have earmarked approximately 40% of our capital to be invested in private businesses. This is a bit of a busy slide, and I think the main takeaway for people to understand is we at Fax are focused on smaller transactions. Why is this important? Because there's less competition for smaller transaction sizes. If you look at transactions above 100 million, very competitive. A lot of private equity funds have been raised that are large. They need to deploy larger amounts of capital, and we see a lot of competition in that area of the market. Valuations have expanded, but in the lower end, where there's less competition, valuations are still very attractive. And this is where we're focused on. We think there's a lot of wonderful small businesses that we can own and build platforms around. In terms of transaction types, we're differentiated at Fax, as I mentioned from the get-go. We're not a private equity fund. We're not looking to buy a company and lever it up and cut costs and sell it in 3 years. We're long-term owners. We look to partner with businesses over the long term. So we see a tremendous amount of opportunity in family-owned businesses where they're looking for a partner like Fax to take a long-term view and shepherd their company to the next phase of their growth. So we see a tremendous opportunity in family-owned business transitions. We also see opportunities in pre-IPO growth equity, where we can be an institutional sponsor to infuse capital, maybe their last capital raise before they go public. So we do see some opportunity there. And we also see great opportunity in take privates. As I mentioned, a lot of small Canadian publicly listed companies are orphaned. They don't have a natural institutional buyer. So we see an opportunity to take these companies private at really attractive valuations, unshackle their burden of being public, and foster their growth internally within our holding company. So I think that gives you a good understanding of who we are as a business, what we're focused on. As I mentioned, we have a great investment team, and I'm going to hand it over to Mark, our managing director, who's going to walk you through our investment overview. Mark?
Thanks, Blair. So investment firms are only as good as their people and their process, and the team at Fax has spent considerable time refining a highly disciplined, structured process. And when we look at investment opportunities, we really ask ourselves 3 broad questions. Number 1, does the company have strong, capable management? So do they have a demonstrable track record as managers? Are they material owners in the company? Are they incented effectively as managers? Second, is the company's business model durable? So are the cash flows predictable and stable? And this is about the sustainable competitive position of the company, its barriers to entry, and the economic moat surrounding the business. And then third, what are the growth prospects of the business? Does the business operate in an industry with market tailwinds? Are revenues recurring, or does the company need to start from scratch each year? Is there a path and framework for M&A? How much capital is required to grow? And will profitability improve with size and scale? So we use these questions to answer the broader question, is this a great business? And once we determine whether the company is a great business, we then look to valuation, where we attempt to underwrite to a 15% unlevered return. As at Q3, a quarter end, our current portfolio was comprised of 5 public companies, 4 of which we've disclosed. And our investments, as Blair said, are concentrated. So our average position size is approximately $15 to $20 million, representing approximately 10% of our book value in each investment currently. Approximately 70 million of our capital has been invested. So that represents approximately 40% of our book value. And we've got 60% or so thereabouts of our company in cash, which represents about $2.73 per share in cash. With respect to industry breakdown, while we are generalist investors, we see the value in consolidating our efforts into a handful of attractive industries. Industry focus allows us to build domain knowledge and increases our active ownership capabilities and provides scalable expertise to grow beyond the borders of Canada. Our investments are focused in niche areas currently of technology, healthcare, and infrastructure. These are all high growth markets, and we expect our future investments to follow a similar path. A little bit of detail on our portfolio. We'll start at the top here. Hamilton Thorne makes and distributes equipment, instruments, and consumable products and software for the global in vitro fertilization market. Management is very strong and aligned. This is a high growth industry with recession resistant characteristics. The product's regulated, it's mission critical, and it has high switching costs, and all of this creates very high barriers to entry. Information Services owns the contract to manage the property, the real estate, and corporate registry in Saskatchewan, and also owns a business process outsourcing business for banks and law firms to manage public records. Management's also very strong in this business. The business is highly durable as a regulated asset, and growth is material as they utilize the excess free cash flow from their business and their strong balance sheet to execute on M&A. People Corp is actually a Winnipeg business, some of you may know. It's a leading consultant and provider of group benefits to companies in Canada. People Corp is exceptionally well run, has recession-resistant characteristics, 96% recurring revenue, is growing organically double digits, and has a platform to execute highly accretive M&A. Finally here, Points is a key service provider to loyalty programs worldwide, and is the primary vendor of loyalty points for the global airline industry. Notwithstanding COVID-19, Points is a great business with strong management and a critical value proposition to the airline ecosystem, with strong profitability and a great balance sheet. COVID has certainly stress tested the Points business model, and the company has responded exceptionally well, posting EBITDA positive results in Q2. And this, along with a net cash position, should allow the company to withstand travel challenges and enable the shares to respond very well on an eventual recovery, which we're now starting to see the beginning of. So as we've said here multiple times, we look to only invest in great companies. And we spend a lot of time focusing on the durability of these businesses and the strength of their competitive position because we're long-term owners of these companies. Hamilton Thorne's moat is built around its mission-critical offering of regulatory-approved medical products. People Corp is a relationship-based business where high switching costs protect the durability of the business. Information Services has a long-term contract in place with the government of Saskatchewan to manage the province's registration assets. And Points has built a network effect over 20 years with 60 airline customers. And this network effect cannot be easily replicated and protects the business against upstart competitors. So I'll pass it over now to Nick, who can walk through the portfolio evolution.
Thanks, Mark. My name is Nick Lim, and I'm a managing director of the investment team. If you turn to slide 13, we outline our portfolio composition. Today, Fax is focused on small cap Canadian companies in public and private markets. We intend to allocate the majority of our capital into public companies and the balance into private situations. The companies we target are less than 1.5 billion on the public side and less than 300 million on the private side. Competitive advantage we have at Fax is our ability to own anywhere from 1% to 2% of a company all the way to 100%. In addition, we have a long time horizon, which allows us to maximize the compounding of your capital and allows us to realize the full potential of our portfolio companies. We think we can achieve attractive returns without portfolio leverage, and we actively manage risks by not being overly concentrated to any one industry or one investment theme. On slide 14, we intend to acquire control of an attractive starter asset, satisfying all the criteria we look for in a good business. We are focused on small businesses, as Blair points out. These small companies are available to us at attractive valuations and offer us many opportunities to add value. At Fax, we're not interested in engaging in competitive auctions for larger companies, where the winner is often one that overpays for an asset. With an attractive starter asset, we intend to leverage our experience in running companies to grow revenue through various initiatives and acquire additional companies that will be synergistic to the platform. Over time, we will build a large platform company, which we think public markets will ascribe high valuation multiples to, thereby creating additional value for our shareholders. It is our intention to build 2 or 3 platform vehicles within Fax. On the next slide, we outline the types of situations that we focus on. Today, the portfolio is comprised principally of companies on the left-hand side of this slide. The companies that we own today don't need capital. They are self-funding. They are not early stage. They have long established track records of growth and are not in need of a turnaround. While we continue to focus on the left-hand side, as the portfolio builds out, we would consider situations on the right-hand side, but being laser focused that we continue to earn a good risk-adjusted return. With that said, I will hand the presentation back to our CEO, Blair Driscoll.
Great, thanks guys, appreciate it. So now we're on slide 17 here, and this is a great slide because it really highlights the opportunity in our shares today. So if you look at the left-hand side of slide 17, you'll notice our book value per share, which is really the fundamental metric of our success, has grown at 4% this year. Now, this is earlier in our evolution, and as Mark mentioned, over 60% of our assets in cash. So when we do deploy capital, it's at much higher returns than that. But overall, our total book value per share has grown at 4% this year, which is an admirable task given our cash balance. Yet our share price has gone down about 28%. The reason we believe that there's this disconnect between our share price and the fundamental value of our business is we're a smaller company today. We don't have a huge following. We don't have research coverage today. So it's creating this unique opportunity where we're delivering on our investment mandate, creating value for our shareholders with our book value growth, yet our share price is disconnected from that. So we think it's a wonderful opportunity for shareholders and potential shareholders to own our shares at a very attractive price today and join us for this evolution as we continue to execute, as we continue to grow. We'll get more, a bigger following, potential research coverage from the sell side, et cetera. So we think it's a great opportunity to buy our shares today. And we see that value. We're actively buying back our stock through our normal course issue basis, and we'll continue to do so if this type of discount continues. So again, we think it's a really great opportunity for investors to get involved in our story today at a substantial discount. Turning to slide 18, as I mentioned, while our book value per share has grown at 4%, it includes a large cash balance. This slide highlights that on our deployed capital, so the money we put out the door on behalf of shareholders, has compounded at about 12% year to date. This has significantly outperformed our major benchmarks, the TSX and the TSX Small Cap Index. And again, while we're early in our evolution, I think this highlights that we're very successful when we put capital to work, and we earn a very healthy return on behalf of our shareholders. And with a 60% cash balance that we're going to continue to deploy very patiently and prudently, we continue to expect and underwrite to approximately 15% unlevered returns. So again, when we put money to work, we do it well and we do it efficiently. So hopefully that gives you an idea of the opportunity. We really appreciate being able to speak to you today. Ramel, thank you very much. Just to wrap it up, Fax is a real passion project for the Driscoll family. It's a permanent capital base with a really long-term oriented viewpoint, which is highly differentiated in a market that is increasingly focused on the short term. We don't think that's the way to build a business. To build a business, you need to have a long-term orientation. You need to have the right structure as a permanent capital base, and you got to have the right team around you. And we think we satisfy all this criteria. We're in this for the long haul. I always say it's a marathon, not a race. We're early in our evolution, and is a great entry point for shareholders to join Fax and the Fax story. So thanks again, Ramel. I think it's over to you, and happy to answer any questions you might have. Ramel, I think you're muted.
There we go. Sorry about that,
go.
Guys. You touched on this point in your presentation, and perhaps you can expand on it a bit more. Fax Capital stock has dropped significantly since the IPO. So can you explain the drop in share price and what measures the company has taken to support the stock?
That's a great question. I'll maybe take it, and I can hand it over to Mark and Nick to see if they have any comments. But they said from a high level, it's quite clear that we delivered on the fundamental expectations of what we're trying to do. Again, it's a marathon, not a race. When we put money to work, we do it very well. We do it very effectively. Our book value per share has grown with a material cash balance, which again is not an easy feat. We think this disconnect really again has to do with being a bit misunderstood and under the radar, and I think that has led to this disconnect. And we just reported our Q3 earnings. We had a bit of a reaction in our share prices as investors wake up and realize that we have this great portfolio of assets that continue to compound, yet we have this discount. So to answer your question, how we're taking advantage of it, again, we have a normal course issuer bid. We've been very clear with our shareholders that if we see an opportunity to buy back our own stock on an accretive basis at an attractive discount, we will, and we will continue to do so. But we certainly think that as our story evolves, that discount will continue to shrink, and I think that's why it's a compelling opportunity. So, Mark, Nick, do you guys have anything to add to that?
Yeah, I mean, I think you handled most of it, Blair, for sure. Markets have been quite never easy, but this year, you haven't had to look much further than Amazons or Apples of the world in order to make money, and so a lot of investor interest has gone to those pockets, work from home type opportunities, and that's taken away from more unique kind of niche situations like we are. And again, I just think it comes back to just not being well known, and as we continue to deliver on our results, people will notice, and markets can sometimes be irrational, and that provides opportunity. So that's, I think, where we're in right now, and we'll continue to deliver, hopefully, and the share price will respond accordingly.
Great. Thanks for that. Sorry, Nick, did you have anything to add to that?
No, that's a good summary by Blair and Mark.
Okay, awesome. Thank you. So second question is, with respect to ethical investing. So, ethical investments are becoming more and more important to investors. How would you describe your approach to ensuring that your investee companies adhere to the highest ethical standards that investors have come to expect?
Yeah, it's a great question. I'll preface that by saying, we're not an ESG firm by the strict definition, but in terms of the ethical behavior, I think because of our strictness with how we view investments, we only look for the highest quality companies. And through our diligence process, and again, we spend many months analyzing businesses. We get very, very deep and in the weeds to understand these businesses. We have strong rapport with the management teams. And through that process, it helps us identify any irregularities or any issues in the business model. And we are very focused on owning ethical businesses. But again, I would preface that we're not an ESG strict company by that mandate. But, we certainly think about owning strong, high quality, ethical businesses. But maybe Mark and Nick might want to comment more specifically on what their thoughts might be.
Yeah, so, as part of our due diligence process in any investment that we make, we do a deep dive on both the management team and the business. So when we study a management team, we do in-depth interviews with the management team. We also do background and reference checks. We talk to other industry participants on the behavior of the management team and the business. We talk to competitors. We talk to suppliers. We talk to customers. So it's a very deep set of contacts that we reach out to. And when we study the business, we often supplement our interviews with on-site due diligence. We visit manufacturing facilities. We would visit the teams that they have in place in different parts of the country. So all of that just kind of reaffirms our conviction that the businesses that we invest in adhere to the highest ethical standards.
And Ramel, I'm going to add one thing. I mean, one of the unique parts about our business is we're getting involved in companies that are earlier in their evolution. They're smaller businesses. So there's an opportunity through our active ownership to help bring best practices improve governance. It really is an evolution of how these businesses grow and how they become more institutionalized. And I think, with an institutional sponsor like Fax, we can help bring some of these best practices as we have significant ownership and or control of some of these businesses to improve on some of their practices, which is, as everyone knows, no one's perfect to start. And as you grow, you become more institutionalized and therefore, have opportunities to improve your practices. And as you scale, I think that's the opportunity. And that's what value that Fax brings to the table to our investee companies.
I'll just add one thing. As we said, like amongst the most important things is the strength of management, as we talked about, and that doesn't necessarily only mean being a great operator. It means operating the company under only the highest ethical standards. That's a non-negotiable for us. If we don't meet those standards, and we have walked away from interesting opportunities multiple times because those standards are not met in our eyes. So that's important. And then also, while we don't invest specifically on the basis of social cause, like Blair said, we actually do have some investments that are, good for the world, i.e. Hamilton Thorne is helping families conceive, and that's great. And 1 in 7 women face fertility issues, and they address that problem. People Corp is bringing employee much needed health benefits, particularly in this environment with COVID, to employees from their employers, and that's good as well. And so that's just not necessarily why we invest, but it's a collateral benefit of good investing, so that's a good thing as well.
Great, I appreciate that clarity around ethics. I think that it's top of mind for people, certainly top of mind for me. So thank you. So more of an open-ended question, goes without saying that 2020 has been a pretty volatile year for stocks, and that now the U.S. election, and with Fed Chairman Powell's commitment to keeping rates low for the foreseeable future, I'm curious to know what you guys think the outlook is for 2021.
Yeah, maybe I'll just preface it sort of big picture, and then I'll hand it over to the guys in the weeds on the investment side, Mark and Nick. But one of the tenets and core beliefs of Fax is we cannot predict where markets are going. In fact, I don't think anyone can predict with any accuracy where markets are going. So, our focus, rather than trying to figure out where the world is heading, is to look insular at our capabilities of analyzing great businesses. And I believe in any market environment, whether valuations are high or low, you don't paint everything with one brush. There are always opportunities if you look hard enough and if you're focused in an area of the market that's inefficient like we are. So, it's been a challenging year, but it's also been a great opportunity with our tremendous cash balance of 60% of our assets in cash that we can deploy into opportunities and take advantage of any volatility as it comes. But as we head into 2021, I think it's anyone's guess where things may or may not go, but Mark and Nick might have a bit more specifics around that.
Nick, do you want to go?
Yeah, so I think while we don't forecast like macro outlooks, I think our view is that we'll see a conducive business environment in 2021, principally driven by supportive stimulus measures by the government, which would help the economy recover from the recession this year. And that's obviously great for the businesses that we own. We anticipate that because of rates being low, that will help maintain healthy credit markets, which again is supportive of like a recovering business environment.
Yeah, and I would add, the pocket of the market which may be overextended is the kind of big cap tech stock, work from home dynamic that we kind of briefly talked about earlier. And we're seeing a rotation out of that kind of right under our feet right now as sort of more of the sentiment and chatter around post-COVID world and vaccine starts to come to the fore. And so, I think that may continue moving forward. We're well positioned for that because, again, we never invested on a short-term basis because of, we didn't buy something because we thought it would have a 6-month bump because of COVID. So in fact, we don't have anything that has any of that sort of COVID bump in. And as markets sort of rotate now into sort of more traditional, kind of less work from home type companies, we're actually ideally a benefactor of that. And the other nice thing I think about Fax having such a big cash weighting is that we're kind of nicely set up for either outcome. If markets continue to be strong, then our existing investments will be strong alongside the market. And if markets are weak, then that provides a great opportunity for us to deploy that cash into softer markets. So either way, we feel pretty confident about the near term.
Great. Well, once again, I am grateful for your time, gentlemen. Blair, Mark, Nick, certainly a very thoughtful presentation, very interesting opportunity. And of course, my rule of thumb when investing in a business is knowing its people. And I'm grateful to know the three of you. And I have such tremendous confidence in your abilities, and certainly your track record speaks for itself. So I look forward to seeing what Fax Capital has for everybody on a go forward. Once again, I'd like to thank everyone for tuning in. At Dhalla Wealth, we focus on helping our clients meet their goals and objectives, and we'd be happy to meet with you to discuss how we might serve you. So once again, stay safe, thank you, and goodbye.
Thanks, Ramel.
Thank you.
Thank you.